There are many out there in the so-called investment analyst expert world who claim that Tesla stock price is going to crash. Is there any merit in this? Is Gordon Johnson right? Will Tesla's stock price hit $65? Is Seeking Alpha right? Are many of the experts who say that Tesla stock is poised for a huge crash getting it right? Or are they missing something? Well, James Hanshaw from Seeking Alpha says that Tesla is driving investors autonomously into a crash and that you're all about to lose billions of dollars between all of you, including me, because I own Tesla as well. Well, hello, my friends, and welcome to the Electric Viking. My name is Sam Evans. I'm coming to you here from Melbourne, Australia. Welcome to all the new subscribers. Welcome back to everyone else. Great to have you here on the channel. Thank you to our Patreon supporters. You make this channel what it is, and I really appreciate what you do. I'll put a link in the description below to our Patreon account if you want to support us. That would be fantastic. So, this is what investment analyst expert James Hanshaw from Zurich in Switzerland says about Tesla. To summarize, since his first article featuring Tesla's crash probabilities on November the 1st, 2021, his stock price is down nearly 30%. So he's giving himself a pat on the back for making a prediction a few months ago and then seeing that Tesla's stock price is down nearly 30%. Of course, he's only saying that based on its all-time high, which it hit for all of 5 minutes. So yeah, there's that. Tesla's founder and CEO, he says, was a seller near the top, and the chairman of the board has been a big seller too. There has been no insider buying since 2019. While on that statement, Elon Musk actually owns more Tesla stock than what he did before he sold Tesla stock. Significantly more, in fact. He now owns 20%, or 21%, I believe it, and he actually owned 17% before. So, obviously he sold stock in order to exercise his options to be able to buy more stock without paying a $5 billion tax bill out of his own pocket, which he simply didn't have. In other words, the only choice he had was to sell some stock to buy a lot more stock. Obviously, the author conveniently ignored that fact. Now, he says that more news continues to come out that threatens Tesla's profits, and most is Tesla self-caused, and goes on to say externally competition is rapidly eroding Tesla's early mover advantage. Now, I remember similar comments being made many years ago. In fact, that the competition was coming. I think, that I'm still waiting, to be honest, for this competition. I would love to buy a Hyundai Ioniq 5. I've received emails from you guys telling me to focus more on them. And I would if they were actually available, but Hyundai just isn't making many at all. It's making very few of them. So realistically, it's not like me promoting or talking about a product that 99% of people living on the planet cannot buy. It's meaningless. It's like me promoting pink diamonds. How many of you here watching the channel can actually buy a pink diamond? Okay, maybe you can. 10 carat pink diamond. You see my point, right? The reason I talk about Tesla so much is because Tesla is by far the most available electric vehicle in the world by a factor of at least 10 or more. That's why I talk about their vehicles. Anyway, this is what he has to say, and it's worth considering what he's saying, and then we can work out if this is legit. That test car being crashed did not hurt the passive dummy driver, but anyone considering buying into Tesla could easily get hurt due to a number of obstacles that are mostly too late for Tesla to avoid, autonomously or otherwise. I might be using a bit of wordplay with autonomous, but one of the obstacles that Tesla could still face is the US government's formal investigation into Tesla's Autopilot, which was in use in a number of crashes when people have been injured and one killed. Well, I should say, in all fairness, Autopilot is not a Tesla-only operating system. The reality is, almost every car brand in the world has their own version of Autopilot, some worse, some similar. And the reality is that if you choose to put your car in cruise control or automated cruise control or whatever the hell your car company calls it, there is a chance that if you're not paying attention, your vehicle will crash. So yeah, there's that. Everyone is in that same boat. So if we're going to crucify Tesla based on that, We have to say the same thing about Mercedes, who have a similar feature. We have to say the same thing about BMW, who have a similar feature. We have to say the same thing about Audi, about Volkswagen, about Ford, about GM Super Cruise, about all of them. Let's not ignore one reality here. You cannot apply one set of rules to one business and not apply it to every other business. He continues, I first flagged up the danger of Tesla's share price and market valuation on November the 1st, 2021. In a crash is certain. Then the stock price of 1,209. The last price, as I write, was 860. By the way, it's at today 920. A decline crash of 28.86%. I included other factors in that article that could hurt the market generally, but some, such as China, have yet to crystallize, making Tesla a standout part of the ripple effect I feared then and still do. But to give Tesla's shocking performance perspective, the S&P 500 is down only 4.3% in that time. Shocking performance. In a more recent article, Tesla's Taper Tantrum, I speculated that the price may eventually get back to $100 to bring its market cap more in line with other car makers. So, James Henshaw from Seeking Alpha claims that Tesla's stock price will hit $100. Gordon Johnson has lost billions of dollars doing the same. It's going to be interesting to see how that plays out. Let me know what you think in the comment section below. Do you think Tesla's stock price could crash and hit $100? Let me know. I now think that might be overly optimistic given the constant feed of challenges Tesla faces, most of which are self-caused, as the Autopilot problem. As the costs for fixing those become apparent, the share price will probably fall significantly. In other words, he's saying the share price of Tesla will fall well below $100. That is quite the crash and quite the prediction. I shall expand on those. Tesla was founded by a visionary named Elon Musk who saw an opportunity in EVs, when other car makers, and especially the US and German makers, were mostly focused on traditional internal combustion engines or ICE vehicles, and were mocking EVs largely. I added that part in. He gained an almost cult-like following among retail investors and used the resultant share price explosion to raise $13 billion in 4 stock offerings. Car making is a capital-intensive industry, and such low capital costs give it an advantage to get off the ground and get into the big league. Today, Tesla is the world's 14th largest car maker, according to Zapier. It also had good profit margins. Being a newcomer to car making, Tesla did not have legacy car maker problems, such as restrictive unions and large company bureaucracies to add cost, plus EVs require many less components than ICE vehicles. Interesting perspective there. That makes Tesla's profit margins better. Gross margins were 23% in fiscal 2020 compared with Ford's 10%. Interesting that he uses 2020 numbers and not 2021 numbers when gross profit margins were significantly higher. I don't know why he chose 2020, but maybe that just supports his thesis. That gap is closing. Apparently, Tesla's superior margins over other car makers are used by many believers to justify its high valuation. But while they are good compared with many, they are not massively better than the world's largest car maker, Toyota. The latest figures show this. Tesla's gross margins, 25%, net 10.5%, ops 12%. Toyota's GM, 24%, net 8%, ops 7.5%. Obviously, he's cherry-picked the 2020 numbers again there for Tesla. That GM gap will close when Toyota and others build more EVs because of the hugely lower amount of materials needed to build EV motors than ICEs. Well, currently, Toyota can't make a profit selling EVs, which is why they're getting BYD to build them for them. So that is yet to be seen. In fact, many automakers right now claim that they don't make a profit on their EVs. Interesting to see if that will happen. Financial results look good. Tesla reported another record quarter in Q4, delivering $2.54 in $2.54 in non-GAAP EPS, beating consensus estimates by 16 cents. Revenues came in at $17.7 billion, bettering consensus estimates by $1.08 billion and registering a 65% year-on-year increase in sales, with cars gross margin at 30.6% in the quarter. Free cash flow increased to $2 and pose a big risk to Tesla's future stock market valuation. Obviously, he's saying that these are the reasons why Tesla's stock price will collapse from $920 today to $50 in I don't know when. Quality, safety, and service. This is a self-caused major problem that only recently started to show as more and more Teslas hit the road. Safety first. This was a situation at the time the above-mentioned investigation started in August of 2021. The investigation covers 765,000 vehicles, almost everything that Tesla has sold in the US since the start of the 2014 model year. Of the crashes identified by the National Highway Safety Traffic Administration as part of the probe, 17 people were injured and 1 was killed. NHTSA says it has identified 11 crashes since 2018 in which Teslas on Autopilot or traffic-aware cruise control have hit vehicles at scenes where first responders have used flashing lights, flares, an illuminated arrow board or cones warning of hazards. If Tesla is found to be responsible for those accidents, the resulting legal claims from the deceased persons bereaved and the injured could result in tens of millions of dollars in compensation claims in addition to the cost for any fixes that might be needed to those cars. The recent announcement of a recall of 475,000 vehicles built between 2014 and 2021 is a safety issue. That is around 25% of all cars so far delivered and must bring with it a huge direct financial hit. Obviously, the author doesn't mention the fact that pretty much every legacy automaker has recalled pretty much every car they've ever sold at some point over the past decade. Assuming $100 cost per car, that means a hit of $47.5 million. That is a pure cash cost and a possible profit hit. Tesla was loss-making until it broke into profits in the latter part of 2020, and to date has made total profits on less than 10% of that amount. If an automaker is found to have hidden a safety defect, NHTSA can fine the company more than $22,000 for each violation, up to $111 million total for a series of related violations. Added to that is this SA News edited report on February the 10th, 2022. Tesla sees fourth recall action in 2 weeks. Federal law requires all safety recall repairs to be provided free of charge on cars that are up to 15 years old. In Germany, periodic technical inspection is required by law. All vehicles must be routinely tested to ensure they meet German safety standards. After a car has been in use for 3 years, it must be tested every 24 months. Many Tesla cars have fallen into this for the first time. And this report by carrecalls.eu for 2021, published on Jan 29, 2022, ranked Tesla's Model S as the 126th worst model out of 128 models. This is an excerpt from that report. The headlight issue plays a role, but also wishbone faults, resulting in a huge failure rate of 10.7%. This means that approximately 1 in 10 Teslas fails their first inspection. Obviously, he's referring to 1 in 10 Tesla Model S's, not 1 in 10 Teslas, but he kind of changes the wording there to try and make you feel the emotion that he's feeling, which is that Tesla's products are bad. Obviously, Tesla Model 3 and Tesla Model Y are manufactured right now in China, and they have pretty good history for quality coming from China. Of course, in addition to that fact, the Tesla Model S makes up a minuscule percentage of Tesla's sales in Europe. These cars would mostly still be under Tesla's 4-year warranty, so Tesla must pay. Plus, it causes the owners much inconvenience while their cars are off the road. Germany is one of the world's biggest car markets. Now, he claims that service is a big negative for Tesla as well, and he says that Tesla is unusual in that it owns its own sales and service centers. That could be a positive, but instead a CNBC report said Tesla has struggled to keep up with service as sales have soared. Customers have complained about long wait times, a lack of loan cars, and having to travel hours to get to the nearest service center. Now, personally, I'm not aware that having a loan car or not is in any way relevant. I don't believe you sign a contract for a car and that entitles you to a loan vehicle when you get your car serviced. I've never had that experience, and it's certainly not the case here in Australia. But let me know if it is in your country. When you purchase a car, are you therefore entitled to a loan car once your car is being serviced? Let me know. Costs. All costs for those many problems must be paid for under Tesla's warranty that extends for 4 years or 50,000 miles. Tesla makes a warranty allowance of $1,500 per car in the P&L at the time of recording the sale of a new car. According to warrantyweek.com, the world's automakers accrued an average of $676 per vehicle sold last year, up significantly from $536 in 2019. Since Tesla is proving to be worse than average, well, we don't have those facts. We only have those on the Model S, but okay. Its costs are likely to be higher than provided for its warranty provision. Tesla sold nearly 1 million cars last year, and there are probably around 1.5 million still covered by warranty. Any costs above the provision will hit future profit figures, but worse is the cash hit. Those fixes are cash costs at the time of the fix, and have not been provided for as a cash reserve as far as I can see. Assuming 500,000 cars need to fix this year at that average cost of $676 per car, then the cash hit will be $338 million. As more cars go on the road, the cash cost will go up accordingly. In addition to that is the car cost of servicing all cars within the warranty period. However, servicing cars is something paid for by the consumer, not by Tesla. So he's incorrectly lumped that under a cost for Tesla when actually it's a profit. If I, as a Mercedes owner or a Tesla owner, go to a dealership and pay for my service, then that doesn't cost Mercedes or Tesla, that costs me. Anyway, unforeseen, unplanned costs. There is a supply chain shortage of many parts at present. Parts needed to fix cars recalled will mean less parts available to build new cars. At the last press conference, Elon Musk said they would be making production the priority this year, and there would be no new model introductions in 2022. The competition is not standing still, says James. The supply chain problems affect them too, but also give them far more time for testing the many new EV models all have under development, thus eroding Tesla's early mover advantage faster than one would have ever imagined. All the big makers are spending billions on new EV and battery developments. Plus, there are around 20 sizable Chinese EV makers yet to show their cars to the rest of the world. I expanded on that in Tesla's ticking time bomb. As you can see, he's written many Tesla articles here talking about all the dangers of Tesla. Consumer low confidence. Some 63% of consumers now feel less comfortable making a major purchase like a home or a car than they were 6 months ago, according to a Forbes survey. According to Inside EVs, Elon Musk has said Tesla will be selling 20 million cars per year by 2030. The market worldwide is slowing, according to this report by McKinsey. If that happens, the existing huge car makers will be fighting to maintain or gain market share even harder. Good point. He has said of himself that he sets unrealistic timelines, as this Business Insider report states. At a certain stage, a business can only grow successfully if based on realistic timelines for the billions needed in investments to meet the sales forecast the CEO makes. Insider silence is deafening. I mentioned this in my opening summary. Tesla's founder and CEO was a seller near the top, and the chairman of the board has been a big seller too. There's been no insider buying since 2019. Important here to just jump in though and say, well, actually, Elon owns more shares now than he did 2 months ago before he started selling. Quite a lot more. In fact, around 10% more. That's a big difference. It may also be telling that no insider has talked publicly. I did a wide search on this about any of the points I mentioned above. If they were not as serious as I fear, then I would have expected them to allay those fears in words and in deeds by buying Tesla shares to demonstrate their confidence in the company and its stock market valuation. Instead, it appears as though the investor department has been silenced and perhaps closed, as I cannot find anything on the website other than legal filings and quarterly reports. That concern is deepened given Elon Musk's penchant for public speaking that seems to have died for now. I personally didn't understand that last paragraph, but maybe you can translate it for me in the comment section below. Investor confidence and a last word. My guess is that many Tesla car buyers will not buy one again in an industry where brand loyalty is crucially important. Now, obviously, in terms of brand loyalty, clearly James Henshaw hasn't looked at how many people have said that they will buy a Tesla again. And it appears as though many owners do plan on buying one and already have bought another one. So it is very common once people own a Tesla that they plan on buying another one. Anyway, the news about poor quality will soon spread and it will deter new buyers. Also, Elon Musk's ambitions for sales growth were almost certainly unachievable before these problems became known publicly. Investors do not have to be passive like the dummy drivers used in car crash tests. The plane below did not get saved by its autopilot, and if I had been a Tesla shareholder, I would have pushed the eject button a long time ago, as did the main pilot, Elon Musk, with his big sale. I would recommend that those who have not yet sold should do so before they get driven autonomously into a worse crash than has happened so far. James Henshaw then discloses that he owns no Tesla stock, options, or similar derivative positions in any of the companies he talks about in his articles, which are primarily Tesla hit pieces. So the data, unfortunately, that he's used here is pretty old, and obviously he's intentionally cherry-picked that data. I think he could have used data that triggered the rally to $1,200 instead of 2020 financial results. Now, James has said that the data he's used here is the latest that he can find. So for some reason, he can't find 2021 data, but he can find data from 2020. And I personally think that publishing articles here where the author of the article can't find data from 2021, when we're now in 2022, is dubious at best. I mean, maybe Seeking Alpha, considering they pay for this content, should make sure it meets a certain quality standard before they publish it. That's just a suggestion. And it would add more weight to his argument if he used current data. Now, central to the thesis here in this article from James is that competitor gross margin will start to catch Tesla. Therefore, its valuation needs to be brought in line with other manufacturers. However, obviously he chose to use Tesla's 2020 data from gross margins, not their 2021 numbers, which show significant margin expansion as well as operating margin expansion. Now, obviously this margin expansion and this operating margin expansion is central to Tesla's current valuation, expanding margins and operational leverage. Now, obviously by missing this data or by choosing to use old data, he's missed a major reason for Tesla's current valuation. Now let's have a look at the current Tesla price targets from all the analysts, basically all the expert analysts, both institutional and retail. Well, Tesla's current price, as I make this video, is $908.91. The 200-day average is $826. The 50-day average is $988. The all-time high was $1,243. The median analyst price right now, as of the 17th of February in 2022, is $1,420. Now, the quite incredible thing about this is that this is actually using and including Gordon Johnson's prediction that Tesla's share price will fall to $67. Obviously, he's a little bit on an island all by himself, except of course, if you include the writer of this article, James Henshaw, who claims Tesla's price will drop to $50. Interestingly, the next lowest prediction for Tesla's share price comes from Craig Irwin from Roth Capital. Now, he claims that eventually Tesla's share price will collapse to $250, or around 4 times more than what Gordon Johnson claims Tesla stock will fall to. Now, interestingly, there is a list of 130 different analysts on TeslaPriceTargets.com. All these analysts are so-called experts. Most of them have a pretty good track rating, and most of the price targets are pretty reasonable. They're all around about $1,500. Now, the author of this article also points out Tesla's price to earnings ratio, which is at about 175 right now. If you compare this with General Motors, yes, very good point. Tesla's stock price does look overvalued in comparison to General Motors. General Motors' price to earnings ratio is the lowest of any legacy automaker at around 6.5. In fact, I think it might be maybe right at 7 right now, which is extremely low in comparison to Tesla. But if you compare Tesla to competitors like NIO and XPeng, well, their price to earnings is in the negative. In other words, they have no figure because it's beyond 1,000. When a price to earnings is beyond 1,000, it's either listed as a minus or it's not listed at all. Neither of those companies have made any profit at all, even though they've been in operation now for a number of years. What about BYD? Well, BYD's price to earnings is almost identical to Tesla's right now at about 180. What about CATL, the world's largest battery manufacturer? Well, they're at about 185 right now. What about Tesla's predicted price to earnings this year? Its forward price to earnings, well, that's predicted to be at about 80, which was where Amazon was at about 6 months ago. So as you can see, that picture there is not so clear cut as the... Now, in terms of his claims that Toyota had similar profit margins to Tesla, first thing is Toyota doesn't make electric vehicles, and they frankly don't have factories or machinery, robots or staff that are capable of building them. And that is the exact reason why Toyota are paying BYD to build electric vehicles for them. They don't have the expertise, they don't have the facilities, and they simply aren't in a position to build them. Whether or not Toyota will actually be able to make them profitably, we don't know. They could be able to. It is very possible. But right now, that's as unknown as what is on the other side of the galaxy. In addition, Toyota's profit this year on making ICE vehicles was around about 19.8%. And that is a pretty big difference to Tesla's 30%. Now, one thing I found interesting when I clicked on this article was that the author is actually linking to 4-year-old articles about long wait times for Tesla service in Europe. Literally, the articles are 4 years old. That's, in my view, misleading. Now, there was an interesting response to this article in the comment section below. As many of you know, many of the people, unfortunately, on Seeking Alpha are very anti-Tesla. I don't know why, but they are. But it says this: all that TSLAQ ever does is fail to give credit where credit is due, and blow everything in the least Tesla negative entirely out of proportion. More than that, deny things that are distinctly Tesla positive, such as Tesla's industry-leading gross margins, which I believe will significantly improve over the next 12 months. The rational have learned to shun such tactics. Now, do any of you remember reading similar articles when Tesla's stock price was at $300, even at $200? I do. In fact, they were everywhere. In fact, Gordon Johnson was all over the news. There is no evidence that the crash referenced on the semi-recalls, some are software upgrades by the way, has had a big effect on Tesla's stock price. The entire market has fallen considerably, especially when it comes to growth stocks, which makes it a great opportunity right now, since late December and early January. Some stocks have fallen by as much as 200 to 300%. Have a look at Upstart, for example. The statement that Tesla owners will avoid buying again in large numbers is obviously purely speculation. That seems to be contradicted by the huge demand as well as production, some of which is spoken for up to a year or even 2 years in advance. The demand is expressed in wait times. And obviously the Elon sells his shares story is inaccurate, as I mentioned, as has been pointed out many times when you study what he actually did in that series of transactions. Musk did not push the eject button on Tesla, nor are the long-term shareholders of Tesla. The competition is coming. The competition is coming. You've all been saying that since 2015, and they're still not here yet. Now, Dave Lee on YouTube has an impressive video about the Super Bowl being free advertising for Tesla. Why is that? Because other EV makers, including ICE companies, are pushing public awareness of electric vehicles, and many of those who become interested in buying an EV will have to buy a Tesla, as most of those companies are simply not producing EVs right now, or at least are not enough to come anywhere close to satisfying the demand. Now, this article and other hit pieces from TSLAQ on Tesla, they ignore what's happening right now and what is about to come. That is an entire paradigm shift in the market from ICE cars to electric vehicles. Like we went from analog phones to digital, and happened very quickly. For Tesla, the improvements and expansion at Gigafactory Shanghai and the impact of having 2 new factories in 2 different places in the world, 2 of the biggest automotive factories on the face of the planet, which will also be very, very efficient and have potentially even higher gross margins than they previously have right now. Obviously, of course, the author ignores the battery progress and the large implications of coming mass production of 4680 cells, not just from Tesla manufacturing them, but also from Panasonic, LG Chem, Samsung, and potentially even CATL. Tesla, of course, is a success story. Its technology and its production attributes and systems are well ahead of its competitors right now. Even Herbert Diess, the CEO of Volkswagen, has admitted to that fact. So is Jim Farley, the CEO of Ford. And this crazy thing is, the goalposts are continually moving as Tesla continues to improve at a quicker pace. Sandy Munro's recent video on the design of the remade Tesla Model S Plaid is an easy way for people to throw some of these strikingly negative forecasts away in favor of a neutral or bullish view on the company. If you haven't already seen his series of videos on the Model S Plaid and the significant improvements in that vehicle, you should check it out. Now, Tesla is still lean in comparison to legacy auto, who obviously are not and who have many billions of dollars of stranded assets. Obviously, startups, while being adaptable and lean and able to pivot, will endure many years of unprofitable business. NIO and Xpeng, for example, haven't yet turned a profit, in spite of the fact that they're selling more than 10,000 EVs per month. They'll have to barely scrape by, just like Tesla did, for a number of years before they can turn a profit. Some of these will see a light at the end of the tunnel. Rivian might survive. Lucid might not. Many won't see that light, and they will go bankrupt. It's just inevitable. And finally, I'm going to end this with Alpha VKK, who said, "Articles like this give me hope that I can still buy Tesla at a bargain price, because there are still people that just don't get what Tesla is all about. It seems silly to discount a company run by one of the best engineering CEOs that has ever lived, who is innovating and delivering on multiple fronts that are arguably at the vanguard of human aspirations and technological prowess. It would be amazing if he just ran Tesla, but he doesn't. People said Tesla would fail and nobody could win against the ICE legacy manufacturers. People said reusable rockets just can't be done, that it's impossible to provide internet to everyone in the world. People are saying brain implants are just not possible, that it's impossible to go to Mars, so why even try? So when I read an article like yours, I wonder to myself, should I put more faith in you or in Elon? I think the answer is clear."